Hi there, I'm Sean, a customer service representative and enrolled agent here at Aardvark Tax. If you're like me, you may have clients who want to know into your strategies that can help them reduce their taxes for the year and the amount they'll have to pay in April. This video is designed to give you some of those strategies. But first up, we're late. We know we owed this to you in November, but we had a stream of illnesses roll through the company this Thanksgiving, and well, it caused us to be delayed at putting out this video. Sorry about that. And secondly, if you are watching this as part of an Aardvark Tax course, congratulations, you're getting credit for this with the IRS and your state agencies for watching it. If you're just watching it on YouTube though, come on over to the aardvarktax.com website and buy any of our bundled courses and you'll get credit for watching this video with your agencies. As usual, please don't forget to subscribe. We put out several videos a year detailing tax changes and strategies, and if you subscribe, you'll be notified when these videos come out. Before we begin, I do have a new course announcement. We've had several clients this year who have had problems with hackers and fraud. So coming in 2024, we're going to create a new course designed to help you come up with a security plan to protect you and your clients from all the bad folks out there in the world who are trying to get your information. Our firm's longtime experience in both technology and tech security will really help you understand the ways in which the bad guys are coming after you and how to protect yourself. Remember, it only takes one incident to destroy your firm's reputation, so it's important to know the best ways to protect yourself. We currently plan to have this course available in May 2024. It will only be available as a standalone course and won't be a part of any of our bundles, but it will still apply to your continuing education credits that you might have for the IRS and your state agencies. Okay, let's get on to our main topic. What are the things you and your client should be aware of for the end of the coming year? Keep in mind that this video is current as of mid-December 2023. Let's start with the upcoming tax law changes. The first one affects your folks who have small businesses. As you probably remember, the American Rescue Plan of 2021 changed the rules for third-party payment processing companies. These are the folks who accept credit cards and do the processing for a lot of small businesses, or they provide checks to gig employees as part of their work. In the past, these companies only had to give a 1099-K to your clients when they made more than $20,000 or had over 200 transactions in a year. The new rules, which were supposed to go in place last year, changed that lower limit to $600. This was a big change and it caused quite an uproar. But good news, just like last year, the IRS is putting off the rule changes once again for 2023. So the $600 limit will stay in place for at least one more year. And more good news, well, semi-good news, is that the IRS has decided to step down the amounts in the coming years instead of forcing the $600 limit on us immediately. So for 2024, the limit will reduce to $5,000. We won't know until the end of next year if they'll end up putting off that rule change again, so stay tuned to this BAT channel. But don't forget, it doesn't matter what the payment processors report. If your clients made more than $400 in self-employment income for the year, they must report that income regardless of whether they get a 1099-K or not. That's actually the only big tax law change for the year that came out late that you need to be aware of before the year ends. There are, of course, the usual inflation adjustments and everything going on with, the Secure Act and things like that, but we covered those in our April update. So instead, let's talk about a few strategies that you can use for lowering the tax burden of your clients when the year end comes. For your more well-to-do clients, the first strategy, of course, is to encourage them to buy that electric car or do whatever energy efficiency upgrades they've been putting off to their houses. These are great credits that can give you up to $7,500 for a new car or 30% of the amount spent on energy efficiency, or $4,000, whichever is less. Energy credits tend not to be refundable, so if your clients had a low year this year but expect to make a lot of money next year, you may advise them to put off those purchases until January, and then they can apply it for next year. For those who made money in the stock market this year, December is a great time to get rid of losers so that you can credit your losses against your wins. Or even if you didn't have a great stock year, you can still lower your taxes by claiming $3,000 of loser losses. So encourage your clients to look at their portfolio and see how they can best balance their capital wins against all of their losses. No matter how much money your clients made, there is still no limit for converting their traditional IRAs to a Roth. That's still huge. That can also be a very big savings in the long run, as Roths allow users to withdraw money from it without any tax consequences. However, your clients may take a tax hit for the amount that they convert, so make sure to get out that spreadsheet and do the math to see if it's worth it for them. And another typical rule of thumb is that paying taxes to get a Roth investment tends to be better for younger folks who have a lot more time to accrue savings. For older folks, it's often best to allow them to stay with a traditional IRA, because the more money generates more money general rule almost always applies. If you do have a client, though, that didn't make very much money this year, for instance, maybe they're just on Social Security or were unemployed, they might be able to convert some of their traditional IRA to a Roth IRA with little to no tax consequence. For those people, that could be a great investment for them, and it's definitely worth checking out if a Roth conversion might be in their interest, even though it does mean they'll have less money working for them over time. Finally, let's talk about the standard and itemized deduction year switching. For those folks who don't have a mortgage or a large yearly itemized deduction list, they may benefit from switching years between itemizing and standardizing their deductions. For instance, let's say I'm single and I make $125,000 in self-employment income every year, but I'm a renter, so I don't have a mortgage and I don't pay property taxes. There's not a lot left to itemize. I might have some state tax to pay, which here in California, based upon that income, would be about $8,000. And then there's whatever charity gifts that I might make. So I'm stuck with the standard deduction if I always pay that in the same year. But here's the trick. I still have choices about when I give to charity and when I pay my last state tax estimate. So I have that $8,000 a year in state tax estimates that I have to pay, let's say $2,000 a quarter. Maybe I pay another $3,000 to charity every year. That will keep me under the standard deduction if I pay it all in the same calendar year. But what if I stagger it? In 2023, for instance, let's say I pay all of my charity gifts in 2024 instead. And then I also make my last state tax estimate in January 2024 because it's not due until January 15th. So for 2023, I get the standard deduction, $13,000 or so. But in 2024, I will be able to itemize my deductions, because along with my full year of state tax estimates and double charity gifts, I now am deducting a lot more than I would have with my standard deduction. I get a $16,000 deduction for 2024 instead of the $13,000. So that gives me, over 2 years, a deduction of $30,000 instead of what I would have gotten at $27,000. This means that switching between standardized and itemizing is a great way for your clients to save big at tax time, 100% legal, and it's a great way for them to strategize and get more money every year. Okay, so that's it for our summary this year. If you have tips that I didn't mention in this that you want to share with others and have them maybe use next year, please leave comments below. Otherwise, we will see you in April when we do our standard yearly tax extravaganza updates. And other than that, have a great holiday and a great new year, and we will see you in April.